Hey guys, welcome back. Today we are solving a problem from leverage chapter, and this is December 24 problem. And let's start with the problem. Okay, this is from financial management, and this is from December 2024 problem. Alpha Pharma Limited, which has been engaged in the business for the last 5 years, furnishes the following information for its product metmorphine hydrochloride, which is being sold for this. They have given the selling price. So when it comes to leverage, leverage is more similar to marginal costing only. We are going to see the half statement. That half statement is actually the marginal cost. After that, there will be the statement which is actually we are going to find out the process of no, adjusting the financial cost, financial related items we are going to deal with. Here where the costing ends, and here the financial things have been started. Okay, what they have given the total sales units, sale price given, fixed cost given, variable cost given, and see what are all the financial raised by the company has been given here, and then tax rate given. What they've asked us to find out is see, they have given the face value of each share. Also they have issued 2 lakh shares. They have issued. Okay, what they've asked us to find out is earnings before interest, earnings before taxes. No, that has to be equal to 0. Then if EBT is equal to 0, then what's the sale units? Okay, at what sale units EBT gets 0? That we have to find out. Then earnings before interest and taxes, no, increase to 3 times. So multiply EBIT and then calculate the EAT. Okay, what will be the degree of operating financial and combined leverage? So all these things we have to find out. So first we have prepared the statement 23 into 21 1 lakh 45,000 units. No, so 23 into 1 lakh 45, 17 into 1 lakh 45, 6 into 1 lakh 45. We have got all the figures. Fixed cost they have given 2 lakh 80,000 that we have entered. Then we found the EBIT, which is the actual profit. Okay, before interest and taxes. No, so 5 lakh 90,000. We found the interest, which is 10 lakh into 11 percentage, 1 lakh 10,000. Then there is a EBT, earnings before tax, which is 4 lakh 80,000. There is a tax which has to be deducted from that, which is 1 lakh 44,000. That is earnings after tax, no, which is 3 lakh 36,000, which is net off of 4 lakh 80,000. EBT minus taxes we have net off. Taxes, how did we found out? 4 lakh 80,000 into 30 percentage. See, they have given the tax 30 percentage, so we have calculated that. Then what they've asked us to do is EBT is equal to 0 at what units, that we have to find out. For that we have to prepare the combined leverage. We have to find out the combined leverage. No, so we found out the combined leverage, which is contribution divisible by EBT. Contribution is 8 lakh 70,000. EBT is 4 lakh 80,000. Okay, we got the 1.18125 times of combined leverage, and there is a formula which is actually finding out the combined leverage by when there is a two unit levels. Okay, when there is 2 unit levels, we have a formula which is combined leverage is equal to percentage change in actually EBT, EAT. That is here. We are not going to get any interest. We are not going to get any tax. No. So EAT, EBT, everything is same. Okay, percentage in EBT and a percentage in sales. Okay, we found the combined leverage, which is 1.8125, and percentage in EAT, which is 100, and divisible by X, which is change in sales, right? So we got the value, which is change in sales. We got change in sales is 55.1724 percentage is the change in sales. Okay, so the sales units is 1 lakh 45,000 is the sales units. 1 lakh 45,000 into 55.1724, that change in sales. No, that has to be the net off. We'll get the sales, which is actually at this level. The EBT gets 0. That's what we have inferring here. And then the next question is EBIT multiplied with 3 multiplied by 3. Okay, he multiply the 3 EBIT into 3, which is EBIT is how much? EBIT is 5 lakh 90,000. No, 5 lakh 90,000 into 3, which is 17 lakh 70,000. And then interest we calculated already, which is 1 lakh 10,000. And there is a EBT, which is EBIT minus EBT, we get net of we get the EBT, then we have to calculate tax percentage, which is in the 16 lakh 30,000 into 30 percentage, we get the 4 lakh 98,000 as the value. After all that, we get the earnings after tax. And what else they have asked is, what will be the degree of operating, financial, and combined leverage? Okay, we are going to find out the financial leverage and financial leverage and operating leverage. What's the financial leverage? Financial leverage, no, this is the financial items. This is the financial items, right? Yes. So what the things we have to take, which is the topmost item, EBIT, which is the bottommost item, which is here we have to here before tax we have to take. So before tax, EBT is there. So EBIT minus EBT is the financial leverage that we have found, which is 1.229 times. And then operating leverage, which is the topmost item, contribution, which is the bottommost item, which is EBIT. So contribution divisible by EBIT, which is 1.47 times, 1.475 times. That's it. The problem is over.